Hello, David Smith. I'm the fund manager of Henderson High Income Trust, and I want to give you an update on the trust given the unprecedented times we are facing at the moment, both professionally but also personally as well, given the outbreak of COVID-19 across the globe. Firstly, I'd like to obviously wish everyone well out there in these really unprecedented times. So we've seen a significant fall in the FTSE All Share so far this year. It's down about 30% to the end of where we are today on the 24th of March. Obviously, despite the trust being more defensive, we have been increasing our bond exposure over the last 18 months. We had been adding to some more defensive holdings as well. We haven't been immune to some of the significant share price moves we've seen in markets so far this year, which has been exacerbated by the gearing within the trust as well. I guess on the positive side, some of our holdings, the likes of Tesco's, some of our pharmaceutical holdings, AstraZeneca, GlaxoSmithKline, and also some of our food producers, so Hilton Food Groups, Cranswick, etc., have performed relatively well in this environment. But sadly, some of our holdings in some of the more cyclical end of the market, the likes of Next Retail, Informa, Go Ahead, as well, have obviously seen share prices have come under significant pressure, as some of their businesses will be at the forefront of the impact from the actions taken by governments to contain the virus. The government lockdown as well, will significantly impact their businesses, and their share prices have come under significant pressure on the back of that. I guess what we've been doing at the moment, when I look across the portfolio, one of the areas that has been particularly strong at the moment is our investment in bonds, and particularly the US investment grade bonds. Now, some of you may remember that we increased our exposure to US investment grade corporate bonds back in November 2018, when yields were very attractive at that point. Now, we've seen very strong capital appreciation from that area of the market and in that area of the portfolio, and now yields are close to historical lows, and I don't think they represent good value from here, especially given the cost of our borrowings that's used to fund that. So one of the things we have done is actually sell down a portion of that portfolio, so around about £12 million worth, and kept it and used that amount of money to actually de-gear the trust to more appropriate levels in these uncertain times. The other thing we've been doing within the equity portfolio is actually reducing our cyclicality. So we moved quite quickly in January. We sold our position in IAG rather, which is the holding company of British Airways. We also sold Ibstock, the brick manufacturer, back in January. And then more recently, we've actually sold Vistry, which is a house builder previously known as Bovis Home, and also Jupiter Asset Management. Now, we've reinvested those proceeds in more defensive businesses that should be able to sustain attractive cash flow and dividends through these uncertain times. And we've added to the likes of British American Tobacco. We've added to our position in Roche, Sanofi, Reckitt Benckiser, some of these more defensive businesses with strong cash flows and robust balance sheets as well. We've also taken advantage of the significant market falls to initiate new positions in some really high quality global franchise businesses, so the likes of Coca-Cola in US, so utilising our ability to go overseas, but also Burberry as well. Both of these companies' share prices have come under pressure, and the valuations are very attractive for high quality global franchises as well. Now, given these uncertain times, the question around dividend sustainability will invariably come up, and quite rightly, over the last few days, we've seen a number of cyclical companies, certainly in the UK, announce their intentions to either suspend or postpone dividend payments in these uncertain times. Now, I expect more to come, and although we have within the portfolio we have a bias towards quality companies, I expect we aren't going to be immune to some of these dividend cuts, and there'll be more to come. And actually, I think we will be supportive of dividend cuts if it means that a company can shore up its balance sheet. Clearly with government lockdowns, short-term cash flow is going to be under pressure, And I think we would support companies to do these types of actions to make sure that they remain financially sound in this difficult period. Now, one thing we always try and do is make sure we have a well diversified portfolio for income, and that should help trying to limit some of that impact. But don't forget, given we are an investment trust, we also have revenue reserves, which we have built over the last few years, which also will help support our own ability to pay that dividend over the sort of medium to longer term as well. In terms of outlook, it is very difficult to say because we are in such unprecedented period. But I think when we look at the evidence from China, Chinese government did move early to bring in draconian measures to really try and contain the virus, and actually things are starting to move back to more normalization there. They haven't had any new cases of coronavirus for a while now. And as I said, things are slowly starting to move in the right direction there. So I am hopeful that the extreme measures that have been taken in some of our European countries, will have the desired effect in terms of slowing the spread of COVID-19. And hopefully over the next month or so, we can start returning to more normalised environment. But as I said, I think that the main messages are, we are a well-diversified portfolio. We won't be immune to these falls, we won't be immune to these dividend cuts, but being well-diversified means we can limit the impact. And don't forget, we have got those revenue reserves there, which also will help support our own dividend paying ability as well. But please continue to stay safe out there, and I will hopefully give you more updates as we go through. Thank you.